Good morning, ladies and gentlemen. I hope you enjoy breakfast. Very warm welcome to our sixth PV networking briefing here today. And I think there is no better way to start such an important event with a powerful breakfast and some latest market figures and our panel discussion that you're going to see in the next few hours, where we have the chance really to discuss what are the latest challenges in the US and in the Californian PV market. So this event is brought here to you. So I hope you all take advantage of the opportunity to discuss and raise the questions that are critical for your success. So very warm welcome. My name is Daniela Schreiber. I'm Executive Vice President of our EUPD research business here in the US, based in San Francisco. And I'm also going to be your moderator today, and I'm going to show you the latest market figures from the Californian market. So, but before we start, I hope you're all comfortable. Just enjoy your breakfast. Go in the back if you want more. So this is a really interactive, casual event. So while you are having breakfast, I'm going to talk a little bit about why we are here. So I know some of you have been regularly coming to our Joint Forces for Solar event series, which is really an initiative that was founded in 2008 here in the US. So we started with this initiative here in the US. And right now we have about 5 events this year all over the US, because the target really is to bring everyone together and to take into account the local market conditions. You all know that the US is a market that consists of 52 states. It's not just the US photovoltaic market. And that is why we are here today. And the Joint Forces for Solar initiative is founded and initiated by EUPD Research and the leading conference and exhibition provider, Intersolar. So you are seeing several information also in the back. So please feel free to look around what EUPD and Intersolar are doing. So as I mentioned, we are here to bring together every link of the solar industry. So starting from global manufacturers all the way to local solar professionals, media representatives, associations, and we really want to look at how we can grow the solar industry in the US, in particular here in California. So thanks very much for joining us today. So we want to explore ways how to ensure that the solar industry in California can continue to thrive, create employment, and bring cleaner energy to the people. Of course, we are facing challenging times all over the world, in Europe, but also here in the US. But manufacturers have continued to invest in innovative technologies. Solar associations work harder than ever to bring solar really to a wider audience. And local solar companies are convincing people, like you are convincing people on a daily basis. And that is why you have such an important role in the solar market, because with your help, the role of solar energy in the energy mix can be secured. So as a market intermediary, you deal with customers on a daily basis, and you don't just sell products. You consult them, you advise them, you educate them, and that is why your opinion is so important to share with the whole industry and even with the global manufacturers, so they can improve their services to you. And so your hard work has laid the foundation on which many of us here have built success. So by sharing your experiences with the manufacturers can actually see how their global strategies transpire into local success. They can find out how their cutting-edge technology enables end customers to enhance energy independence. But of course, all this would not be possible without the support that we've been receiving with our initiative. I mentioned already our strategic partner, Intersolar, who's been doing a tremendous job supporting and bringing this joint forces to actually not only to the US, but also to Europe and to Asia. So I would also like to thank our sponsors. because they have been supporting us to have this event here today. Our premium sponsor, China Synergy, who will be part of the panel later on. So you have the chance to discuss the latest developments here. Our gold sponsor, Qcells, also a long-term support of our initiative. So we really appreciate your support. Our media partners, Solar PV TV, I hope you don't mind to be on camera. So there's going to be some filming going on. If you do mind, just raise your hand and we can take care of it. So our media partners, Solar PV TV, PV Tech, PV Magazine, Sun, Wind and Energy, you all have a copy in front of you, as well as CalCIA and the California Public Utility Commission and the German-American Chamber of Commerce. So they all contribute to our event with showing us the latest insights, the latest developments. So thank you very much for coming and taking advantage of that. Furthermore, I'd like to thank our supporter, PV Exchange, for example, and all other supporters for their support. And all of us here, we can make sure that California can remain a leading state. So you survived the introductory speech. So I do hope you all know about the Joint Forces for Solar Initiative. There's more material in the folders. So just have a look how you can engage in the initiative. As I'm not just your moderator, I'm also going to bring you the latest market information on the US and on California. So I'm just going to start right away bringing you some of the latest research results that we have put together, published in January 2012. So it's really very recent what we found out. So we will have an overall overview, market development, some tendencies, but there's a special focus on procurement management and also deriving certain winning strategies for California. So just a very quick word about why am I here and why am I qualified really to talk to you about the US market and the Californian market. This slide just shows you, and I hope you can see it, shows you our company. So it's not just market research represented by UPD Research. It is really a company incorporating three main pillars. So the Hoerner Research and Consulting Group is a group involving UPD research with data gathering, research and analysis. So this is important. All the data that we present is based on actual surveys. So following classical market research, because the quality of data is very critical if you want to convert that into strategies, how to penetrate and enter the markets. And that is where our consultants would come to the fore. So we have a consulting arm in-house, harking back to that data and to the expertise the company brings by means of developing strategies, et cetera, providing training. But in order to really go to market, you also need communication and implementation support. So that would be our communication arm 360 concept, bringing the information to very specific target groups using that special knowledge that we have gathered since 2000 when the company was actually founded. We have representative offices all over the world, Europe, Bonn and Berlin. In Asia, we are based in Shanghai, Ahmedabad and Taipei. And here in the US, our headquarters is in San Francisco. And we have another representative office down in LA, focusing on the implementation of strategies. This is just a very, very brief snapshot who we've been working with during the past 11 years. So really, it's about the industry, but also associations. I'm not sure whether you've seen it. We've done numerous projects on behalf of the solar energy industry associations, really looking more on the public side, looking at how legal measures such as the cash grant, really what was the outcome in terms of jobs, in terms of investment. So what did it actually result in? So we've done a lot of projects for global associations, but also investors and governments. So now you know why I'm qualified to be here. So now let's just go to the PV market development in the US and in California in specific. I hope you can see the numbers. Please bear in mind you will have access to the presentations afterwards if you have handed in your business card at the registration. If not, you can do so anytime. So this is really an overview of the market in 2008 and the market in 2011 on the right-hand side. Don't get confused about the colors. So the colors, really, the dark blue represents the leading state, followed by a lighter blue, etc., etc. So the colors on the left-hand side do not represent the states, and the colors on the right-hand side. So just to give you an example, California was really the major market in terms of market share. If you look at installed capacities, PV capacity, so 60%, followed by Colorado and New Jersey. That was the picture in 2008. So now let's look at 2011. Yes, California has only half of the market share it used to have in 2008. New Jersey really picked up and got a higher market share, increasing to 12%, followed by Arizona and Colorado. So what's the reason for that? Just the very first glance at the chart shows that the US market is a lot more fragmented now. So you see a lot of activities in several states across the US. If you look at the gray bar, that's what's the rest of the USA, and that share moved from 4% to 17%. So you see there's a lot of initiative going on, resulting in a lower market share in California. So this is another chart I brought you today. So really looking at the market development in California. So you see on the x-axis, you do see quarterly installed capacities, right? Q1, Q2 in 2007, and the colors represent specific system sizes. So this is how the market has developed over a course of time in California. And there's really a split. So there is a split. You see that after Q2 2010, does that work? I don't know. Oh, switching it on would really help. There you go. So after Q2 2010, we see that there was a shift in segmentation. So before, yes, historically, the market was determined by residential and small commercial rooftop segment. That accounted for about 75% on average. But now this changed, and more open space and large commercial rooftop were built. So that is a trend that's going to continue all the way, or that has continued all the way. And you see it's already the large-scale systems, larger than 1 megawatt, accounts already for 50%, and the future is going to be like that. So there is a strong dominance of open space segment. So looking at installed capacities is one way to do it. Let's go a little bit deeper. So here we brought you like a glance on a snapshot on what kind of technologies and applications are really used, because that shift in segmentation, what I've just showed you before, does have consequences. So once again, historically, the residential segment was really dominant, and clearly that comes with the utilization of crystalline technology. So you see 2008, it was like more than 90% was in the crystalline technology field, and about 10% for thin film. And with that new open space segment and the increasing open space segment, the share of thin film really has increased as well. And that is due to the fact that the thin film does have specific operational characteristics in hot climates. It works well in terms of outcome or yield. Also, it is well applied in areas where there's abundant space, right, which is the case here in the US. So these open space plants that have been installed were installed in desert areas. So the first large utility scale project in 2008. And so that has an impact for thin film technologies. And then below, you see what is the application. So obviously the building applied PV, so rooftop systems, classical rooftop systems have a dominant share. It's like 90%. We have open space, only 6%, that's 2008 figures, and a very tiny share of building integrated PV. Whereas in 2011, you see that the open space jumped to a third of the overall installed capacity. And you also see an increasing share in BIPV. So there's a stronger demand for aesthetically pleasing PV systems, but also tendencies in the Southwest, a lot of PV being installed on car canopies. So this was the market side. Let's just go to the other side and look at how procurement takes place. Not only how procurement takes place, or whether there are some tendencies that explain a procurement pattern. The chart that is represented here is actually a result of our latest US installer monitor I mentioned before, which was published in January 2012. So we surveyed more than 300 installers, project developers in the key 5 US states. And what you do see here, we asked the question just simply, is there any country of origin you prefer, origin of modules? So we see that buy local, buy American behavior, it's quite strong. It's like 62% actually of the installers mentioned, yes, we do prefer modules coming from the US, followed by Germany with a little bit more than 20%. So that's the situation, and then followed by Japan, and so on and so forth. On the other hand, if we ask, like, which countries do you avoid, you see quite a strong share of avoidance with respect to Chinese products, Indian products, Mexico, and Taiwan. This, of course, is a result we measured because of the trade case. So there is a perception of guilt with respect to dumping, anti-dumping, and killing jobs, etc., etc. That was in the news, that was perceived, and that is the result of this survey. Whether or not this really reflects on reality, we are going to have the chance to discuss that later, but so far that is the result, a snapshot of time when we surveyed. That's just not deep enough. So let's move one step further. So what you do see here is you see specific customer segments. So we split our installer group into those, what is your target segment? So we ask them, what's your target segment? So target segment, private, commercial, public, agricultural, and utility. And what kind of products do you offer? Where are they from? So you see the dark blue represents US manufacturers, Chinese manufacturers is the lighter blue, the very light blue is German manufacturers and other brands, and thin film. So let's just walk through one by one. So what you see in the private segment, so installers that focus on the private customer, you see that they have more than 50% of their portfolio consists of US manufacturers. This is how you read it. And that is followed by Chinese manufacturers with almost a third of the portfolio being determined by Chinese products, and the rest is like small and maybe not worth to mention because that covers actually 82% of the market. That's the picture in the residential segment. If you look at the commercial segment, it's quite different. So you do see that the portfolio installers offer to target that particular customer is determined by 42% of Chinese products and only 20% of US manufacturers and 13% German manufacturers. On the public side, you have a similar like private, so strong dominance of US manufacturers, but also the German manufacturers are strongly represented in that segment. Agriculture, again, more than 50%, or 54% to be precise, is determined by Chinese manufacturers and 24% by other brands. And US manufacturers only 15%. And you have utilities, similar picture, like in commercial, US manufacturers strongly 55%, followed by Chinese manufacturers 33%. So that gives you a little bit to think about. So you see that there is a tendency that US is dominating the private and the public in the utility segment, whereas Chinese products are really focusing on commercial and agriculture. That is the result. Okay, that's something we can discuss later on as well. So that was the portfolio with respect to country of origin. Let's look now, how about the wholesale market? How is the wholesale market characterized? So one thing you can really see is that it's strongly fragmented. So you have a lot of wholesalers that were mentioned by the installers who they work with, who are the most significant wholesalers of PV products. But it really boils down that there are 4 wholesalers that are in particular, particularly well positioned: DC Power, Solar Depot, AEE Solar, and Sunwise. It's a highly competitive area to work in the wholesale market. If we now ask what kind of sales channels the installer, the downstream market is using to get hold of PV products, then you see that when we ask what percentage of your modules do you plan to purchase via the following procurement in 2011, so you see that there is a majority that says indirectly via wholesaler. So wholesaler is pretty well positioned, 60% versus direct sourcing from manufacturers, 39%. But if you now look at the installer group that we surveyed, you see quite significant differences. Large-scale installers do focus rather on sourcing directly via manufacturers, more than 50%, while the rest is sourced indirectly via wholesalers, and small-scale installers really source via the modules via the wholesaler. And those who do get their products via wholesale, we wanted to ask, or we wanted to find out, what kind of wholesaler are you using to get your products? So PV wholesalers, electric wholesaler, or other wholesaler. So this is the color it represents. And here we see it's really the PV wholesaler that gets most of the market, 84% in total. And you see that there is not a significant difference between large scale or small size. So the PV wholesaler is really the wholesaler of choice, followed by the electric wholesaler, which is represented by 14.8, so 15% of the installers. So this is a kind of difficult chart, but it's not difficult because I'm going to explain how you can read it. So we talked a little bit about origin of PV products and how that matters when sourcing. But the question is there really like a qualified reason? Is there a reason to pay more if that product comes actually from the US or made in Germany or made in Japan? Just to give you a few examples. So it has a lot of statistical terms here. It's really fairly easy, minimum and maximum values. So at least one installer said, I would pay double the price when the product is made in the US. And at the same time, there were installers, or at least one installer, that is not willing to pay any cent more for a product made in the US. Then you have the median. This is a little different to average. So it's not the average for those of you who are involved a little bit in statistics. So the median is really, you have the distribution, so you have answers between 0 and 100, and the median really splits the distribution in half. So that means that 50% of the installer that answered that question said something between 0% and 10%. And the other 50% are between 10 and 100. Yeah, so it gives you a good idea where the majority of answers is. So it is really around this area, 10%. So we can come to the conclusion that made in the US, installers would be prepared to pay 10% more. Whereas in Germany, 5% more, in Japan, 5% more as well. And you do see that there is that the maximum value was really 10%. Here, at least someone said that products coming from Germany would qualify for a double, or would be willing to pay double the price if that product came from Germany. So what does that all mean now? Let me just wrap it up a little bit. And please excuse if I'm going to be very, very direct. So I'm trying to be neutral. I'm taking just the information that we presented. And I know it's going to be a little bit provocative, but I really do count on you to discuss that with us later on. So these are just the statements that we can really conclude from what I've just been showing you. So there's a clear preference for made in the US products. The market of wholesalers can be described as rather fragmented and competitive. The sourcing of small installers is dominated by the wholesale channel. A price premium can be realized by US and German manufacturers. If they're sourcing via wholesalers, then it's the PV wholesaler that is really dominating the market. The larger the installer, it's pretty obvious, the more he tends to source directly. Residential and public rooftop applications are clearly dominated by the US brands, whereas agricultural and commercial rooftop segment is dominated by Chinese brands. So much about the results. And if I push it even a bit further, and again, being provocative, what does it mean in terms of winning strategies? If you have a made in the US or made in Germany product, state it. If not, just leave it. If you are a US brand, target the residential and the public segment. If you are a Chinese brand, target a commercial and agricultural segment. And as a manufacturer, you should try to sell directly to large installers. That's the conclusion for the manufacturers. For the wholesalers, if you are a wholesaler, specialize in PV wholesale. No focus, no success. Wholesale competition is rather hard, so you might add value by specific customer relationship programs. That could be a tentative solution here. Wholesalers should target small installers and find ways to bind them to increase loyalty. Wholesalers should rather sell US or German brands. This is where the premiums are. And on the installer side, it's probably best position here. Installers are the gatekeeper to sales and in a very good position. I'd like to leave you with that because that concludes really my presentation. Take it as it is. It's really just like the conclusion of the results that we've seen. Whether it really reflects the reality or not, we are going to see in our discussion that is going to follow afterwards. So thank you very much for your attention so far. So the questions I'd like you to keep for the panel, so I'm available for your questions too. I would like to invite the panel up just right now while I'm introducing one by one. Help yourself, get just a quick cup of coffee. I will introduce and then we start with the panel discussion right away. So if I may ask Nick Chassé, he is Director of Market Development from Qcells here in North America. He's an experienced project manager. He has more than 6 years experiences in renewable energy and policy surrounding. At Qcells, he's serving as a Director of New Market Development and Government Affairs, where he's responsible for Qcells North America strategic marketing efforts, as well as representing Qcells with local, state, and federal government agencies. Prior to that, he had a background. He was an MBA extern at Trading Origination Group of Exelon, where he developed strategic roadmaps for new renewable energy markets. He had similar roles at Renewable Energy Funding, Tessera Solar, Clean Tech, and Green Business for Obama. He also served as a regulatory analyst for the California Public Utilities Commission, where he established or helped to establish a solar water heating incentive program. Next, we have Mr. Willis He. He's the CEO of China Synergy, China Synergy's US operations based in San Francisco. He's also board of directors at the Solar Energy Industry Association, and he has more than 13 years of experiences studying and working in the US. His background, he used to work with MEMC Electronic Material, where he worked as a solar sales director, expanding MEMC's China-based business, and he holds an MBA from Olin School of Business, Washington University in St. Louis. We have Randy Zechman, I hope I pronounced the name right, from CalCIA, representing CalCIA today. Thank you very much, Randy, for coming today. We have Amy Reardon. She is the program manager of the California Public Utility Commission. She's a senior regulatory analyst for the CPUC, where she manages the implementation of the California Solar Initiative and policies related to customer generation, including tariff design and integrated demand-side management. Her background is in economic policy and regional economic development. And I'm very happy to announce our final panelist, who was not on the program. And I'm really pleased that you agreed to come to our event today on a very last minute. It's Matthias Altieri. He is the Managing Director and Head of Solar Energy of Thomas Lloyd Group, PLC. And he has a strong solar background. So he's been working for many years with Qcells in Germany, developing and significantly the business in Italy. So he started as a Vice President, Origination and Business Development, preparing Qcell Service Italia, where he served as a CEO and Chairman for the past 4 years. His background is an economics and business administration degree of Ruhr University in Bochum. And prior to that, he has a degree in aeronautical engineering. So that's also expertise he can bring in to this panel here today. So everyone, thank you very much for joining us. All right. So while I'm trying to look up for the next slide, I would like to ask you to prepare your questions so that we can start right away with our panel discussion. So remember, it's really about you and about our panelists here today that just made the way to come here to join our event. So are there any questions from the audience? Who wants to be first to shoot a question to our panelists? Or maybe a question to the presentation, to the overall market development you've just seen? You need some more time to warm up? Okay, so I'll come back to you in a second. So may I just kindly ask the panelists, really, you have seen the market developments, you've seen some of the challenges, and you've seen my provocative statements. So could I ask everyone just to share with you the opinion, what you think the main challenges in the Californian solar market are? So what are the aspects that need to be worked on, each of you from your individual perspective, from the manufacturer side, from the policy side, and also from the financing side? Is there anything you would like to share with us? Maybe, Mr. He, I can start with you. What are the critical things that had to be done in California in order to secure the prosperous development?
Okay. First, CSUN, probably quickly introduce CSUN. CSUN is a solar panel manufacturer at 1 gigawatt capacity in China. And we recently opened the business in the US. Recently, like everyone knows, we're facing anti-dumping things, right? Probably in California, you guys have seen that the pricing keep increasing. So obviously, the panel represent 30% of the cost. Probably one of the raw material costs could be higher. You are facing this kind of challenge. Particularly today is the March 13th, countervailing tariff could be announced by the Department of Commerce today. So that's one of the challenges, I would say, in the panel.
Nick, what do you think?
I think the biggest challenges facing the California market specifically are probably threats to net metering and the potential of the application of a cap to net metering. So currently the regulations in California state that no more than, well, the utilities do not have to offer more than net metering to more than 5% of peak load. Currently we're at, depending on what service territory you're in, between 2 and 3%, with expectations that by the end of this year, PG&E would hit its 5% net metering cap, which would mean that at that point, the utilities who hit those caps are no longer required to give you credit for any solar energy that you backfeed into the grid, which would have obviously very adverse effects for the whole residential and commercial industrial market, which is still not maybe on a megawatts basis because you have some of these mega projects that are being built, but really is the backbone of the California solar market. So until that issue is dealt with, and I know that there's some work going on at the California Public Utilities Commission and also the state legislature to amend these requirements, but until that's dealt with, there's a real dark cloud in some sense, I guess, over the California solar industry.
So do you expect any consequences, this insecurity in the market? Do you see the market to stop or anything, any result?
So it really depends on what the outcomes of these efforts are. So if there is no change to the methodology for calculating the 5% peak, or the 5% peak is not lifted, absolutely, I see the commercial, industrial, and the residential segments slowing down very significantly.
Amy, I'm so glad that you're here because I think that's a perfect question for you. Can you talk about the latest developments?
Yeah, somewhat I can. I'm going to echo what Nick says. First of all, that net energy metering is certainly the horizon, the biggest policy change on the horizon. And obviously calculating how this policy is calculated, how this figure is calculated is very important. Right now we're kind of relying on utility calculations, but at the commission level we are obviously taking another look at that to make sure that that's really and truly the way to calculate the NEM cap. But when we take a look forward, we have to ask ourselves, do we want to keep ratcheting up the net energy metering, or do we want to come up with a new and possibly better way to offer benefits and to accommodate more and more distributed generation within the state? And so one of the things we're taking a look at in a new proceeding at the commission is how, in addition to how we calculate net energy metering, are there other policies that can help facilitate distributed generation?
So what would that be? Can you make it a little bit more precise? What direction are you looking
Well, I mean,
at?
obviously, there are a number of tools in any policymaker's tool basket. You know, there are feed-in tariffs. There are variable forms of net energy metering. There are community solar models. There are kind of closed loop systems. You know, we're taking a look at like virtual net metering. I know that seems to exacerbate the problem at first because it seems to expand net metering, but a new community model that could kind of mitigate, it's not so much about putting all of the energy on the grid, but you know, using some of that energy at like where the load is centered. So outside
basically self-consumption models, like where you use it where it's produced as distributed energy, what it is.
Right.
And what's the closed loop
Well,
model?
that's what I mean. Rather than putting the energy onto the grid the way we currently are doing, you know, where we would be able to, under virtual net metering, where we'd be able to use the energy in a region, you know, and not rely so much on the utility grid itself.
Very interesting. Thank you. Matthias, how do you see the Californian solar market? What, from your perspective, what is the biggest challenges and how can that be tackled?
I think, first of all, we should be aware that globally we have the same problem. We are missing energy, and we're missing energy, not the children of our children, we are missing energy. We are in a region, in a country which does have energy and sun. So I think that is the best opportunity and the best market we can be in. I know colleagues from manufacturer do have their challenges to the market. I know that also my uncle, he was the CEO of the grid owner in Italy. So I learned from the very early beginning what are the challenges to the sun. I mean, we do not deliver base load. We are a peak load provider, which is an opportunity, but also a challenge for the grid owner. They have to handle our energy, which is, once a cloud is coming over, they face a big issue. And in order to manage that, we have to be, we have to look for the right solutions. And therefore, I think whether it's California or Italy or wherever in the world, if we are in a sunny belt, we will find the right solutions, both for manufacturers, for the grid, which is very important, and also for financial solutions. Today, I think we are struggling all over the world about financial crisis. Nevertheless, whether it's a 1603, whether it is a tax appetite here in America, whether it is an feed-in tariff in Europe, which was the solution to start with this photovoltaics. Now government do not have solutions, do not have money. Therefore, I think what is crucial to us is that we are in an infrastructure segment, and therefore all governments, they have to keep workforce, and they have to make sure that we have employed people, and that means to invest in infrastructure. And energy, solar energy, is one of the key issues in that. Therefore, whatever we need in financing small rooftop installations, big utility scale solar plants, I think we will find the right solution for that from the financial viewpoint.
So what would be potential? I mean, financing is indeed a big issue, and maybe we can go a little bit to the cash grant situation. Cash grant hasn't been extended. Anyone in the panel who knows, is there any chance it's going to be extended? Because I think there are tries again and again to put it in several bills. And if not, what does it mean for financing? So then I come back to the financing solutions that Thomas Lloyd is offering, and maybe we can also talk about the industry that's getting more and more engaged in financing. So first, any idea on the cash grant? Is that over now? Maybe Randy, can you talk about that?
So I'm Randy Zechman. I'm CEO for Clean Solar. We're a CalCIA member, and our company is an integrator here in California. We basically focus on residential installations. So we're kind of the highest rated installation company here in Northern California. So that's kind of my perspective on all this stuff.
Yeah, so maybe you can elaborate on, is that actually important for you, the cash grant? What has it, resulted in for your company? Sure.
So the original question is, what's the most important thing kind of for us? And for us, it's financing. It's all about financing. So if you look at in 2010, there was in the residential market, there was 28% of the systems sold were financed, were leased, or PPAs, and last year it was 68%. So huge switch in 1 year. And what we're really seeing in the trenches is that there's a lot of devil in those details. So we went from having hardly anyone offering financing to having maybe 7 or 8 different alternatives for financing, but it's really all over the page. We'll be quoting systems at $6 a watt that are more expensive for financing than other jobs we're quoting at $8 a watt. So the financing is really all over the page. So what we really need in the space is some higher end banks or more competition in the financing of renewables and solar, which will ultimately help bring down and normalize the price of financing. So a $6 a watt solar system or $4 a watt solar system, whatever it is, will ultimately be the same end price to that consumer. We've seen, and to come around to the 1603, so we're a little less affected on the residential space because of the 1603, because what most of these entities have done is they've safe harbored a bunch of product. So we haven't really seen the end of the 1603 residentially because of all that safe harbored product. But eventually it will. It's kind of smart the way they played it out, because eventually folks will run out of the safe harbor, and so as the year goes on, it'll kind of trickle away, as opposed to in the commercial market, there's really a cliff to the 1603, and the first half of the year will be very weak commercially.
Is there anything you can share from your perspective, impacts of the cash grant?
Yeah, sure. So last week there was an effort to extend the 1603 tax grant in the Senate, which failed. From what I understand, that was one of the last existing legislative vehicles to move a 1603 tax grant. So I'm sure it'll be a topic that is widely discussed this week, but from my personal perspective, we're probably not going to see a 1603 extension this year. When you're talking about tax equity financing, it may have been EUPD, but it may have been somebody else who did the research looking at total demand in 2012 was roughly $7.5 billion, and there are roughly $3 to $3.5 billion of available tax equity funds. So certainly there's that large gap. Now, that seems almost insurmountable, but I think the reality of the situation is there are new tax equity players, particularly corporate tax equity players who are coming into the market to finance projects. Google was sort of the first one to do this. They say, hey, look, we have corporate tax appetite, and we're going to apply it to the solar market. But what we're starting to see is large utilities, particularly in the Northeast and in SREC markets where you have retail competition, who are entering into the solar space and are actually providing their retail customers with solar equipment leases, and they are taking those tax credits themselves. So I think that there are a whole new set of players who are just not even participating, who are tired of seeing U.S. Bank just take these double-digit returns, and you'll see that gap between the 3.5 and the 7.5 shrinking. Certainly, tax grant is an easier method, just in terms of when you get paid and some of the transaction costs. But I just don't see it happening, particularly in a year where there's not going to be a lot of tax legislation addressed until after the election.
Okay, so far, just to wrap up, there is not really a problem with financing. There's rather too much possibilities, which causes like bigger price differences. You're saying there is a lot of financing or business models, new businesses getting in, corporate financing, et cetera, et cetera. We will have like lease programs, we have SRECs, we have various means how to finance. Yeah?
So I think just the one additional point is that the problem in financing is not necessarily access to financing for the end customer. It's who the installer or what installers are selling the system. So if you're a small and medium-sized installer, you're going to get squeezed in 2012 and 2013 when it comes to financing.
Squeeze? Can you elaborate a little bit more?
Squeeze in terms of once you run out of safe harbor modules, you may not have a financing mechanism that you can offer your customers. Whereas larger companies, be they larger residential or commercial installers or even utilities that are entering into the solar industry, they are going to access tax equity financing, are going to have lease and PPA products. So I think you're actually going to see a quickening of the consolidation in the installer space as well.
Which is a very critical thing. We do have some installers here in the audience. Is there anything you would like to share? Yeah. Can you wait for the mic, please, and introduce yourself?
Yeah, my name is Larry, and I'm from DT Solar Systems. We are a small installer. And the question I have that I met many people who wants to have a solar system, but financing is an issue because in this economy, many people do not have good credit, and many people or company who do finance, they require high credit. So is your company offer help or finance for those customers who wants to have a solar system but do not have good credit at this time? So how we can handle those customers?
So I think this goes back to what I was saying just a touch earlier, in that because it's kind of the Wild West in financing residentially, and everyone kind of rushed in and might not have thought through all of the details. There's kind of a standard of a 700 FICO score, which is pretty common. You're seeing some entities go down to 680 or something like that. We have talked to some of our partners that are talking about doing a low FICO score, getting closer to like the 620 range. And so I think as more come to the market, more financing entities will find their niche, right? And so some of them will start to go after this kind of lower FICO score, because there's a huge market there. There's probably 20 to 30% of our customers walk away from deals because we can't get them financed because of their credit scores. So I think there's a real need for that, but it just takes a little while for that to make its way to a financing entity for them to then come up with a product. And so I've heard them talking about it a little bit now. I would suspect we'll see something this year that starts to lower those risks and just be higher returns for those entities.
So you're being optimistic that you're going to continue offering solutions?
Certainly, yeah. It's in our space in residential, financing's here to stay for sure, and it just makes too much sense for not to.
So can I maybe direct the question then to manufacturers, because I know there's a lot of initiative for financing, lease programs, et cetera, et cetera. Is there anything, Nick, Mr. He, what do you want to contribute?
Yes. First, some Chinese manufacturers also look into the financing opportunity in U.S. And for example, Seasong, we recently have opened some credits with Chinese commercial banks. So we're looking to the project investment in U.S. Potentially, we can have hundreds of millions of dollars looking to opportunity in U.S. So overseas, have a lot of investment group also looking to U.S. market. Particularly in Europe, a lot of projects the IRA return is getting slow. So I think the U.S. market will attract more investment. And another information probably share with you that last week, Mr. Chu, the Secretary of Energy, U.S., invited hundreds, about Fortune 100 companies, first Fortune 100 company in Washington, D.C. Interesting that some of the CFOs ask quite challenging questions, like, does that your solar, Mr. Chu tried to invite Fortune 500 companies to do the tax equity investment, right? And they ask some challenging question like, does that your investment fit our core business model? First question. The second question, ask two questions, then they shut down. They are not so interested. It looks like they are dilute their business strategy direction. They are not so interested in that. So looks like the tax equity is going to play, right, very critical role. Yeah. But 1303 is going to expire. So internally, domestically, U.S. needs more education to attract tax equity player in U.S. market. And one very important data I just want to show is that for the first time in Q4 2011, the more third-party owned system were installed in California solar initiative territory than host-owned system. I mean, that's the trend. The third-party become a trend. So I would encourage the installers work with Sunrun and clean power financing, and work with the equipment like Seasong. We are looking at opportunity, overseas investment, looking for the financing opportunities. Yeah.
So do you share that? Again, dear installers, do you want to say something about that? Is that the way forward, third-party ownership? Because I know that also causes quite some significant price differences. No comment? Nick, can you maybe mention something? Is there any activity on your end with respect to financing?
So, it's certainly something we've spent a lot of time internally looking at. There are a number of vendor financing programs that are being put together by third parties that would allow us, we essentially enter into a contract with a independent financial institution, and they allow us to then pass an equipment lease through to the end customer that our installer partners can then market. And at this point, we have not yet made the decision to engage with a vendor financing company here in the U.S. I think it's a somewhat immature market. There are only a few players who are doing these white label products that Qcells would brand, say this is a Qcells vendor financing by X, Y, or Z company. But as that matures, and as some of the larger financial institutions, really more typical equipment leasers, so large banks that do automotive leasing or tractor leasing or all this kind of stuff, as they get into solar, I think we will continue to look at it and evaluate what our partners want. And I think that's one of the other things. We have yet to really feel that much of a pull from our channel partners for our own vendor financing, because there are a number of other third parties that are doing it on their own, like Sunrun or Clean Power Finance or a number of other organizations.
And that's maybe the result of safe harbor. Right now, the situation isn't that critical. So talking about installer perspective, talking about manufacturer offerings with respect to financing, I'd like to address the question to you, Matthias. What can Thomas Lloyd really do with respect to financing for the Californian market or for the US market in particular? Maybe you can also introduce a little bit more in the background where Thomas Lloyd is coming from.
Generally speaking, we are talking about a product which is leveraged. So we need equity and we need debt. And if we think and put ourselves into the shoes of a debt provider who is the biggest portion in that deal, they think about risk. They think about development risk, construction risk, grid connection risk, and maybe also some risk to run the plants or O&M. What Thomas Lloyd is offering in order to get on a global scale, and especially also here in California, to get access to good projects. That means that we are investing already now, and we published a fund of almost 30 million euro, so 40 million US dollar, only in late stage development, meaning that we are going to help developers once they are almost done and they're missing the last help in getting these projects authorized and close to financial closing, we are stepping in. Then we provide, together with the manufacturer, we provide somehow construction finance, meaning I think 60% still is caused by the module. Then the next portion, the biggest portion, is structure and inverter. And then electrical and civil works. I mean, there you can discuss with you and the installers how to manage that best. And then the next step is how to guarantee and how to mitigate the grid connection, meaning to face and understand really the issues of a grid owner. What does it mean for them? So Thomas Lloyd is looking into all the project, into the whole value chain, thinking together with the customer how to bring that product or project to financial close, sit together with the construction company, EPC, or installers to overcome the bridge finance period. And then once you're grid connected, we have the same solution for the final term sheet investor. Meaning, and also Thomas Lloyd significantly helped Qcells in doing their whole bunch in Canada with Starwood as their financial investor. In order to make that possible, you have to sit on a table, you have to understand the risk portfolio of a bank, of the debt provider, and then you will find a solution.
Thank you very much. So I think there is good news. There is really financing is an issue, but we see a lot of results that there are new business model, new ways to finance projects, and there are ways. But I'm afraid, Randy, I think it's not going to reduce the complexity. I think there's going to be more because there is really an opportunity here. Are there any questions on the audience on financing or any other topic?
Hi, my name is George Chow. I'm from Greentech Power Group. We're a developer. We do mostly brownfield to greenfields. And then one of our first projects in Napa, it's a 6.7 megawatt. And I would like to ask both Matthias and also Nick. I think for developer side, like for us, 6.7 megawatt is about like 20 million. So like in the beginning, we were able to finance on our own. Like we saw because you know, from pre-development, going through all the entitlement, all the permit, and getting all the CUP, and also getting the interconnect. I think we went through the whole process ourselves, and then we were able to carry this kind of project on our own. But right now we have a pipeline of 20 megawatts project coming up, which is about like 200 million. So like on that kind of size, we're not able to do it on our own. And actually, we were the first project actually going through the virtual metering, through the Rule 18. I think that's what CPUC is trying to do. And then we have been asked by PG&E to kind of testing this thing to sell our power through the 12 kV lines in American Canyon area. So I was just wondering, like, because usually when we work with the manufacturer and they were telling us, most of the people, they say, we don't finance you until you get your PPA. And then we tell them, if we get our PPA, we can go to anybody. We don't need you, right? So there's always this chicken and egg thing that so we were wondering, like, do you guys, like, what's Qcells' strategy on this? Because we have been working with all the Chinese manufacturers. Actually, we have China Development Bank and all this bank coming. But everybody was saying that, you know, once you get a PPA, you come talk to us. And then we told them, if we got a PPA, we can go to anybody else. Like, why do we need to talk to you? So we were just wondering, like, do you guys have any any solutions or anything that can help develop like us? Like we already have a 6.7 megawatt. I think we're almost done with that, but we're looking for financing for our 520 megawatt project. And then is there any, I think you kind of talk about that, and is that, should we like talk to you or like?
Yeah, I think in the beginning you looked at Nick, so I don't know whether you want him to ask first.
You know,
to
we just open it to the whole panel.
Okay.
So we start with Matthias and then with Nick and Mr. He.
Yeah, I mean, what you exactly described are our market. So we look into, and again, we have a fund and we are a bank. So we are quite well in America and in Germany. So we have really somebody who's watching us, especially in these days, what we are doing. However, we raised a fund with, at the end of the year, it will be around 150 million euro. Sorry, I don't have the exact number, but take it as $1 million, to really invest in late stage development. Because our risk portfolio and our shareholder and the people who invest in us, they exactly know that we will lose a little bit of money and we will, of course, also have a benefit for them. Meaning, and coming to your question, yes, we are looking to people who are not really early stage, but close to a PPA, close to financial close, and then we discuss with them how best and how quickly we can bring that to financial close in order to start construction. That it's all what we're looking for. And meanwhile, we already discussed with different capital provider in construction and so on and so forth, how to finance the whole project. So I'm happy to hand over you my business card, and then let's see.
So
There is a networking break afterwards. Nick.
So the approach that Qcells would take with a developer like yours is we actually, at Qcells, have our manufacturing group, and we manufacture cells and modules, but we also build turnkey systems. So Matthias was mentioning a 66 megawatt project that we recently built in Canada. We're also building a 36 megawatt project for PG&E here in California. So in a situation like that, we actually have a group of engineers who sit in San Francisco who we would have engage with the developer and who actually actively work with developers all the time to provide sweat equity. So, you know, we will work with you on interconnection, we'll work with you on system design, we'll work with you on site evaluation, and we will, you know, bring our human capital to bear. But also, in some instances, we have the capability to make investments in projects. Say, all right, we are going to take an interest in your project with the understanding that we would have either a financial stake or some sort of ability to put our modules into those projects. So certainly, I think the one issue is that we're right now in an environment in California where there's increasingly fewer and fewer chances to find offtake for utility wholesale projects. And so the risk factors of a developer, I think, are growing. And I think that you're actually going to see a lot of developers squeezed in selling their projects, because you talk to the utilities in California and they'll all say that, hey, we're procured to 33%, and maybe in 3 or 4 years when some of these big projects don't perform, hey, we'll go out there and procure again. But in the next 2 or 3 years, we're just going to sit back and let the developers try to build those projects. And so you're right that, hey, once you have a PPA, it's a lot easier to sell. But from a manufacturer's perspective, I get approached almost on a daily basis by developers saying, hey, I have this great project, and I have limited resources, and so I'm not going to have an engineer or 2 engineers who are just spending all day, every day, evaluating developers' projects. A lot of times I say, you know what, come to me when you have a PPA, and hey, maybe once we've worked together, then I'll feel more comfortable in being involved at an earlier stage.
So yeah, the evaluation of projects is certainly a big thing, and I think we're going to move to market segmentation right afterwards to talk about the potential of utility scale. So that was business opportunity number 2, if I understand correctly. So maybe, Mr. He, maybe you can also talk about, is there any possibility, any potential solution you could offer? for this
Yeah.
kind of case?
Just as I mentioned that CSUN is looking to the PV project investment opportunity. For us, frankly speaking, we are still in, money is less important things, because my CEO told me you can go for 100 megawatts, because backed by some Chinese banks, just mentioned that. Money is not issue. Issue is risk management, frankly speaking. We're a panel manufacturer. We try to do some kickoff project. We want to make sure the project have low risk. Risk important. Once we can kick off few megawatts project, 10, 5 megawatts project with quality, how clean the project is a clean quality project, kick off successfully, we really can unlock the golden mine back in China. So even the Chinese banks are learning U.S. things. So frankly speaking, that I have recently talked a lot of U.S. banks. They are like more than happy to partner with the equity provider. We'll become a tax equity provider. We will become a sponsor cash eventually holder for the PV system. The business structure there, but we are looking for a quality project. Even though previously I worked for MMC Scientists, obviously we have some project over there, but I'm also more than happy to looking with new partners like you guys have a solid project. We can learn each other basically. I believe that as a Chinese company, I feel I'm more humble in the U.S. Our return will be lower, but we will need to learn. We need want to grow a lot of developers like you guys. We just have a mutual understanding. I need to learn. Yeah.
Thank you very much. Any other comments?
I'm Tom Ernest with DuPont. This is a question for Randy. You mentioned something about residential systems having different financing, that a $3 or a $5 system might end up costing more than an $8 residential system. Can you elaborate on what that difference is, why it is, and is this coming just from the finance side, or does it matter about the equipment that's being financed?
Excellent questions.
Yeah, so we can, one of the major players in residential finance over this past year has been SunPower. And SunPower's partnered with Citibank. I think Citibank's the money behind it. And SunPower modules cost $1 to $1.50 more per watt than Chinese modules or other modules. And we struggle to find a financing partner for every other product other than SunPower that actually give you a cheaper lease rate than SunPower modules will be. So our cost is ultimately going to be the same. A module to us as far as putting it on a roof, right? So from an installation standpoint, and at $1 to $1.50 more a watt, the leasing number ends up being less. So companies like Clean Power Finance, which has a great business model, and I think they'll be successful long term. Their problem in the short term is I can't use their product, because why would I sell a SunTech module when I can finance a SunPower one cheaper and it's a higher efficiency? So it just feels to me, I don't have nearly the depth of knowledge as some of my colleagues here do on the topic of financing. So I'm just kind of letting you know what we're experiencing on the back end. But it seems to me if more players got into that space, that they would start financing these other products, and ultimately we would sell them because there is a need for it.
That's a strong call to the industry. If there would be more solutions about it, then you could actually sell more.
I think one of the problems you see, particularly in residential or in commercial finance, so for systems that are behind the meter, is that they don't have a long history of performance. So from an investor's perspective, you think about risk, you think about, what are the comparables? Well, we've been leasing solar systems for 2 or 3 years now, and so I think there's just a lot of financial institutions that are waiting on the sidelines. They want to see 5 years of performance, 7 years of performance on the asset, so on a pool of loans, to see, all right, what do we think the real default rate is going to be? Is it less than 1% as what they're saying now, or is it really 3%? Because there are people who are going to move out of their home, there's foreclosure. So I think it's really going to take a few more years before you really see a massive influx of, every single large commercial bank saying, hey, we're going to have our own solar PPA or solar lease product.
I'd like to comment on that real quick. So we actually talked to, and I've probably personally talked to 30 or 40 different banking entities trying to get our own financing entity for clean solar and not having to use a clean power finance entity. And it strikes me that financing entities are very rooted in data, right? It's all about risk versus reward, and it takes time for that data to play itself out, like he's talking about. But intuitively, is production data really going to change different this year than 5 years from now or 3 years from now? So there's a lot of intuitive things that I think that the financing entity financings end up taking a little while to get to, where companies like ours that are just operating on the private market really go, that makes sense, let's go after it, and don't need this real long depth of data. And I think he's right in the fact that once we cross a critical juncture, then Wells Fargo is going to jump in, or someone else is going to jump in, and then you're going to see a bunch of entities jump in because that threshold will have been crossed.
Tom, questions answered? There's one comment here, and I'll be right with you.
Hi, my name is Ulrika Haug, and I'm from Q-Cells, and this question is from Matthias. I know we've kind of talked a little bit in regards to financing, as kind of danced around the issue a little bit, but can you speak specifically towards bankability and what sort of criteria your firm has for bankability in banks in general when you're looking at financing projects?
Good question. I mean, as you might know, I was until five months ago, I was sitting on the Q-Cells on the manufacturer side, and I exactly understand what is going on in Europe. I think we have Germany as a market who was always leading a little bit and suffering now also from feed-in tariff, from financing, and so on and so forth. Italy then was and still is the second biggest market worldwide in PV. What we are looking into and what we are looking for once we are deciding to finance a project, to find different solutions, first of all, yeah, we are looking into a developer who really understands how the market goes and not selling but peak. Because a developer normally starts in optimizing the surface, which is not the way how a manufacturer or an EPC looks into that. Because once you optimize and you put the last module in the last angle, that means that for technicians, engineers, EPC, they have to cut the cable on spot. That increases the value and the amount of EPC prices. So once we have a standard format according or around an inverter, and then this what we can copy and paste, and that makes it much easier. And I know the figures of Q-Cells, they in the recent project, they install more than 12 megawatt a week. So that means once you have a standard, that means good development. Then obviously I started working for Q-Cells once. It was a marketing event of Siemens who said a module will have a guarantee of 20 years. And where is it coming from? Because a cell manufacturer or even a silicon/wafering, they give you only 10 years. But then on a sudden Siemens, it was a marketing, I don't know whether gag is the right English word, but it was a marketing event from Siemens saying, we give you 20 years of guarantee. Which today, the banks are happy if the module manufacturer, he has to provide a bond, or the EPC. That also there, we are talking about a module, and that is nothing rocket science. And if we in 8 years, 10 years, I'm sure you will not find anymore a module of 240, 250. The first project I did in Italy, it's now 5 years ago, we still used a 165, 185 watt peak module. And now they are broken because stone fall in and whatever can happen. We do not find it. So we have to have all the repowering stuff. That means Again, we have to go to the grid provider, talking to them, let them know, because it's a different way we ask for to feed in or to put in energy, new situation. And now that means, and coming back, sorry, I did not forget your question, but I mean, that means also a good construction, sorry, that means also a very nice EPC who is able and capable to react, be competitive in the market, and then able to quickly, because in that market here, we are talking market which is very quick and very fast. We have to move fast, we have to react fast, and we have to get the limited debt which is available from the banks fast.
Okay, and maybe we can do the networking a little bit more, because there was another comment and we're almost at the end.
Again, my name is Larry from DT Solar Systems. One comment on the leasing program or third-party ownership is that homeowner pay throughout the years, maybe 10 year, 15 year, and then they make a balloon payment at the end. And many homeowners do not feel comfortable by the balloon payment. Something which is sellable is that they pay for the ownership. So system they can have now, but over the period, like usually pay of time is 7 to 8 years. But if let's say they pay for 12 years, so that is a kind of incentive to the whoever is financing. But after 12 years, there is no balloon payment. That is something is sellable. Another question I have for Amy is that earlier CSI has a program, or at least something going on, that city or county will start financing for the solar systems, which will be homeowner will pay back in terms of the property taxes. Is that still going on, or what is the status on that?
Yeah, that's still under development. I think that a lot of lobbying groups, that's called property assessed clean energy or PACE programs. And they ran into some financing problems at the federal level with the Fannie Mae and Freddie Mac. I mean, basically getting into issues where the mortgage holders had issues with anybody being in front with, in case they default on the mortgage, they wanted to make sure that they were first in line. And so there were some issues there. I think they're being resolved. I have actually, to be honest with you, I haven't had my head in that game for a little while. Some of the things we also see from time to time is at the utility level is like on-bill finance, which would be suitable for a lot of homeowners. And I think even businesses, and I think it's not very risky because we all know people will pay their utility bill. They will do it. In fact, they'll pay their utility bill faster than they'll pay their mortgage. We have a lot of data that shows that, because I mean, you can get away with not paying your mortgage for a while. You don't pay your utility bill, and that's the end of that. So on-bill finance programs are going to be suitable probably for the commercial, maybe probably small commercial market and residential market. Now, property assessed clean energy is something that's being rolled out regionally. I know that Solar Sonoma County has been working on that. Is it Palm Desert? Palm Springs or Palm Desert? Yeah, Palm Desert has a program that's in place, but it's really a matter of working with mortgage banks. I don't know if I answered your question, actually. I'm not sure.
Okay, there's another question.
Hi, Amy. My name is Sean Capra. I work for Willis He at CSUN. Can you please expand your opening comments, the programs that the CPUC is coming up with in the future, things we can expect, and maybe help us understand how these programs will affect?
Programs meaning in lieu of net energy metering?
Any measurements that you have in place or you are going to put in place?
Well, I'll be honest with you, we have just begun to discuss this internally. It is clear that something has to happen. It seems a little foolish, really, to keep ratcheting up the net energy metering cap, because there are some real consequences to the state at the economic level, and also to the utilities at their economic level. You have to understand that we do risk greater cost shifts, the volume of cost shifting increases the more net energy metering we accommodate on the grid. And that's because you have to, these are some of the utilities, best customers, that in a tiered rate system, people in the top tiers are subsidizing, that's where all the money that runs operations and provides profit, that's where that all occurs. So if that's being offset, there's larger and larger cost shifts that occur in the lower tiers or just the everyday, you know. So we have to take an earnest look at what the best policies upcoming will be. And I understand that people are going to be banging the drum for increasing the net energy metering cap. And that might be something that has to be done legislatively this year by, 1 or 2%. But in the long run, we really have to work on a better system to integrate more and more distributed generation.
Is there some tentative timeline to that? So you mentioned that you started discussing. So is there any plan when you would like to come up with modifications?
Well, first things first, we have to study the issue. And we have a net energy metering cost benefit study that we're beginning right now. In 2010, we had issued a cost-benefit analysis for net energy metering, and so we're waiting on the new results, and that's going to largely dictate which direction we take. I have a feeling we're going to find out that net energy metering is too costly going forward, but that's just that's almost kind of the logical assumption that you make because it's merely economics. It's really.
So say you continue discussing and you finish the internal discussion, say, by the end of the year or sometime this year. How long does it take to translate into legislation? I have a hard time to understand how this translate, right, from the regulatory side.
Well, the regulatory process in place requires a lot of vetting from stakeholders.
That's what I would assume.
Right. And really it depends on the outcome of the studies. I mean, how controversial are the findings? How suitable are the models for the California economy? How do the utilities feel about it? The job of the CPUC is to balance the interests of ratepayers and utilities, not to just put the utilities completely out of business, nor put the solar industry out of business. So we really have to make sure that what we're doing is optimized for the entire state, ratepayers, industry, and utilities.
So we're looking at midterm.
Am I putting this question off as long as possible?
Okay, no, I understand.
One of the things that I just can't do, because it doesn't do anybody any good, is to try to, guess at when we might have a solution to this. But obviously it has to happen before we reach that 5% cap. And what are we now in PG&E?
And
land?
when do we reach the 5% cap?
Or something like that. We're about 2.6% of at least PG&E's territory, 2.6 of the way there. So I would say within the 18 months, we're going to have something sorted out.
Thank you very much. Sorry for pushing a little bit, just to get a good understanding, because everyone needs to kind of prepare mentally as well. And I think this is something, rather than rushing into things, of course I know it takes time and we need to prepare because that's going to change the market. We have similar developments now in Europe, right? Things take time to finally, flow into the market and actually produce.
Well, and it has to do for us too. I mean, the reason I am also hesitant is because I'm waiting to see what the legislation looks like at the end of the year. It is possible that they're going to push it forward just because we don't have anything on the ground yet in terms of an alternative.
Thank you very much. Nick, were you about to say something? Okay. So any last comments? Because unfortunately we are at the end of the panel discussion. Just one more.
Hi, I'm Glenn Forslund, Automation Solar in the Bay Area here. Excuse my voice. My question is, do we need a cheerleader in the sense that, sort of a commentary about 1603, what's happened, the net metering issue that you talked about, Amy, the issue of rebates going down, CSI numbers dropping in terms of cents per watt. All in all, there's a lot of, what I would say, Solyndra-ish kind of things going on in solar that when I got into this business in 2007, it seemed like everything was on the up and positive. It was very exciting. It reminded me of the semiconductor business in the late 70s, early 80s. And now it seems more like the dot-com business in the 2000, 2001. And from a standpoint of, I'm in the business, but from the standpoint of a person on the sidelines, for example, our customers, all our customers, what they see is very negative. And they see a lot of fighting. They hear about lawsuits. They understand that the utilities want to make more profit. And then they also understand that they want to make more profit but not kill the solar business as well. And most of my customers have a tendency to sit on their hands when they get too much negative in the press. And I was just wondering if we have a cheerleader problem, or is there going to be something that's going to come out and the sun's going to shine and Al Gore is going to remarry, or something,
Well, I think that's an excellent question to close up the panel. That is why I would like to ask anyone to comment on that. Do we have a cheerleader problem? What can be done? So everyone, please, just a statement. Starting with Randy. Are you?
Yeah, well, I think that's kind of where the space that SEIA's in and CalSEIA, that they've taken on that role of being the lobbyists for the industry. And I see them more active than ever in getting more groups involved in helping. I think it is unfortunate that the press that's out there is often bad, but I would say that solar as an overall industry has gotten way more press than the actual business that it generates. If you look at dollars to the GDP versus press that's written, so we've really been on the front end of benefiting from that overall. And I think it's unfortunate recently that there's been some issues, but I mean it does not feel to me like the .com industry at all. And I see almost all positive from my perspective.
Thank you. Matthias?
No, really good question. I think we can talk about hours about that. Still, we are in energy business, which is one of the most crucial businesses we are in, and we need energy. A country is industrialized, better it's settled in the energy business. Then the sun, still it is free of charge. Still, I think people already think about how to take that, but nevertheless, until now it's free of charge. We are in a business which is a young business. I think solar it's very, very young, and look to how developers are settled, how EPCs, where they are coming from, how the manufacturer side developed. Look to a company where inverters are coming from. Inverters was a core business and the smallest unit of an UPS system, uninterrupted power supply. So all that created a market where the companies before invested a lot, so they have to be a bigger return. Therefore, the market was very expensive compared to carbon or wind or whatever. And now this market, solar energy, we have to be grid parity to be competitive with other sources of energy. And then our industry gets more and more materialized. And also financing has to apply to the special risk profile of a solar power plant. Therefore, we are in a great business and we will stay in a great business.
Thank you. Amy?
Well, I agree with Matthias that this is a real product that's being sold, and as a result, I don't think that you can compare it to the .com boom or the mortgage speculation, because, I mean, security-backed mortgages, that doesn't exist, okay? Just like the .com bubble, that was based on speculation. This is real energy, real product. So I don't think it's entirely accurate to draw that parallel. Now, as for maybe perceptions in the marketplace, I know that consumer expectation is a real driver in any market. I feel a little sad because as marketing director for the CSI program, maybe I should be out there with my pom-poms doing more cheerleading. With any industry that's kind of as nascent as this, really you're going to find that there are people who want to kind of bag on it and drag it down a little bit. Remember, Solyndra, that was what, 1% or something like that of the overall loan portfolio? I mean, in any RD&D program or something like that, you're going to allow what, 10, 15% of failure? You just want to be realistic. So it's really a public perception, and I see your point, which is that maybe we should be combating public perception. But on the other hand, we're like the new kids, so we're being teased a little on the playground or something like that. But in time, the numbers the numbers won't lie. It's going to be found out in the marketplace that this is an actual product that, that works.
Thanks for being so honest, sharing both views. Nick?
I think that we need to focus as an industry more on the positives. There's a lot of dislocation going on within solar companies, and in a year we all may work, other companies or different companies are going to be sitting up here because there's a lot of change going on. But the facts are the facts. Solar in the US grew 100% last year, so we installed close to 2 gigawatts. We're going to get close to 3 gigawatts in 2012. Prices have come down incredibly. I was reading a report the other day that North Carolina has reached grid parity. North Carolina, we're not talking about Southern California, North Carolina. On a monthly basis or on a quarterly basis, new states are able to open up to solar because the price is coming down. And so, as every 10, 15% price decline that we see, which is almost happening on a quarterly basis these days, that's a new set of customers who are willing to go solar. I think what's happening is solar is now becoming a part of the mainstream energy industry, and we're just not used to that. Those of us who are in the solar business aren't used to playing in that bigger playground, that bigger sandbox, and that's difficult. But we're getting there. You're seeing big utilities, big companies like DuPont are really getting into solar in a major way, and that's a great thing. So I think, my view is that's what really shows why solar is here to stay. And yeah, it's, we're having some press issues. It's being politicized with an election coming up, but we'll weather the storm and we'll be stronger for it.
Thank you. Mr. He, final comment?
Yes, I completely agree with that. Solar industry is growing very fast, particularly in the US. From the global review, you guys don't know how other overseas guys comment on US. It's so shining that the US successfully more than doubled this 2011, right? It keeps growing. Market share growing from 5% to 7%, it continuing growing to 15% globally. So whole international lot of guys, including Chinese resources, are really paid so much attention on US as well, China. And for example, this year, 2012, both US and China will hit close to 3 gigawatts. You guys don't know how shiny US market, and it's very healthy. And I think US finance system, everything really have good mechanism to support the development. Even US market is a bit cautious, have a lot of struggling, but everyone is struggling. But the grid parity is kind of, it's kind of dream, it's going to hit. As I know, due to the confidential information, globally, a lot of resources, including semiconductor industry, Korea company, Chinese bank, Chinese resources, and the US finance groups, every group have a kind of grid parity goal. When I work for Fargo Hydro, everyone have a next 3 years or 4 years, we got to hit a grid parity. So at that point, we will become pioneers. So pioneers is difficult, but the future is beautiful. And CSUN is committed, is a bridge between US and China. CSUN will contribute our own resources into US. For example, we have a brochure there. CSUN recently launched a QUASAR system, a module, a cell. It's 19%. We successfully use the semiconductor technology into the solar. So 19% efficiency. Everyone developer knows that 1% cell efficiency increase represents 7% cost saving for developers, including rooftop, racking, labor, these kind of things. Meanwhile, we'll also pull our finance group resources from China into US. So the one world, one dream. We are going to hit a grid parity globally. Thank you.
Thank you very much. So 2 important points, if I may add. It boils down to communication because there's a lot of positive news that can be actually reported about. The development of the solar industry and the solar markets is just tremendous if you look at the short amount of time. So communication is important. Grid parity, unfortunately, we cannot go into depth, but of course, grid parity means, first of all, to understand and then to communicate the effects also to the end customers, because that changes the market drivers too. That's what we are currently facing in Europe. So it's not going to be, you know, how much money do I get per kilowatt hour I produce? It's how much money can I actually save? That sounds really easy, but it's a significant change in, you know, thinking, and that has to be communicated to the end customer. So a strong call also from our side on the communication. I apologize for being so late. We still have some time for networking and for more breakfast, but please help me thanking our panelists and sponsors. Mr. He, thank you very much. Thanks, Nick, again. Thank you, Amy. Thank you, Matthias. Thank you, Randy. I think it was a great event. We talked about market segmentation, we talked about preferences, so the numbers that I presented, I am particularly pleased that we talked about additional aspects, about financing, about regulatory aspects that are going to come up. But at the end of the day, it doesn't matter what I think, it matters what you think, so please fill in the feedback forms that are in the folder, because we want to improve our events continuously. Don't forget to put down a note for Intersolar North America. There's going to be the 7th PV networking briefing right on the show floor. So please mark it down. If you're in Europe, of course, join Intersolar Europe as well. Thanks very, very much. So enjoy networking, enjoy the PV America show, enjoy and take care of yourself. Thank you. Thanks for coming.